Hello and welcome to this RegTech Spotlight. We have a tremendous lineup of RegTech with us this morning. So much to cover. Between us, we pretty much cover much of the globe and probably most of the spectrum of the RegTech as a whole. So we should have a fascinating discussion. We'll kick off with the introductions. Just very briefly, the problem your business is solving and your role in the business. We'll start with Yuelin.
Thanks. Hi, everyone. My name is Yuelin Lee, and I'm the VP of Strategy and Business Development at Onfido. At Onfido, we help businesses across the world verify the identity of their users from onboarding and throughout the customer lifecycle using a combination of ID documents, biometrics, other signals, and databases. We work with financial institutions, retailers, travel companies, healthcare, amongst many others. We are headquartered in London, and we have offices around the world in the US, France, Portugal, Germany, India, and Southeast Asia.
Brilliant business. Thank you, Yuelin. Danny?
Hi, great to be here. My name is Danny Gao. I'm Chief Revenue Officer at ClauseMatch. ClauseMatch are helping compliance teams with the silos in their business across regulations to obligations to policies, controls, and keeping that full life cycle in check. So we are a document management system for compliance and risk professionals, headquartered in London, offices around the world as well, working across a number of spectrums of the industry, financial services being the main area.
Brilliant. Thank you, Danny. Rhodri.
Good afternoon. I'm Rhodri James. I'm Chief Revenue Officer of NorthRow. NorthRow UK, headquartered RegTech. We're focused on deploying kind of onboarding and know your business solutions for complex financial services use case. We operate across high-end property, financial services, and also into the regulated space. So we support the open banking services here in the UK.
Brilliant. Thank you, Rhodri. And Paul.
Hi guys, Paul Huston here, VP of Product from ComplyAdvantage. We're a tech company transforming how financial institutions manage their financial crime screening risk and monitoring risk. We do that by helping financial institutions make better risk decisions through our proprietary FinCrime data, smarter remediation, and easy integration. We've got offices in New York, London, Singapore, Cluj, and Romania.
Beautiful business and really tremendous growth. Thank you, Paul. Maria, I'm the CEO of Taina. We possibly will win the prize for the least sexy area of RegTech, but it's incredibly essential and painful for financial institutions of all types. We cover FATCA and CRS. We help financial institutions of all types automate their compliance with FATCA and CRS. We save them a phenomenal amount in costs, reduce their risks, and most importantly, perhaps in the current environment, we help them onboard their customers faster with a better customer experience. So that's us. And I think the wonderful thing about this panel is we really cover a wide spectrum of the industry and the RegTech. So we'll start with the broad themes. Let's start macro and then go into the individual issues and zoom into those really interesting developments. 2020 has been a hell of a year for us all, for RegTech as well. What maybe we could begin with is just comparing and contrasting how you think RegTech has been performing in the context of FinTech as a whole. What have your observations been in light of pandemic in particular? Yuelin, maybe you first. What has been your observation so far?
I think from our point of view, we definitely felt the world was a bit shaky come March, but actually has rebounded really quickly. Because we work with financial institutions, but also non-financial institutions, definitely some sectors have been hit pretty hard, no surprise, like travel and transportation, whereas actually financial services have held up really well. And the digitalization of financial services is actually more eminent than ever, since there are so many things that you can no longer do in branch or in person. So it's actually been a really great opportunity, I think, for us and probably many other companies in this space who are involved with that. Some individual companies, I think, probably who are consumer facing, it really depends on what their use case is. But in general, the ones that have been doing well seem to be continuing to do really well. and a lot of our customers are still expanding quite aggressively across Europe and also across the globe.
Brilliant. And as you rightly say, Yuelin, for us as RegTechs, much of our growth is really determined by the growth of our customers, right? Brilliant. Well done. Congrats. What about you, Danny?
Yeah,
How has
sure.
2020 been?
2020 has been a crazy year, but from a business perspective, it's been a huge growth. And I would just say that for the sector as a whole, for ClauseMatch as a company, but also for the sector as a whole, completely agree with what Yuelin said. I don't think it's alone. So I would say any business that is helping around remote working right now is also having a boom. Any business in cybersecurity is also having a boom. Any business in security as a whole as well. So we're not alone, but I sort of see this as the first boom of the RegTech was before RegTech, the RegTech label happened, was after the financial crash. And we saw a big, the first surge. That was when I joined my first compliance company over 10 years ago now, or compliance tech company. And I see this as the sort of second boom of the RegTech space as well.
Awesome, fascinating. Let's come back to the second boom, which is very, very interesting observation. How about you, Rhodri?
Yeah, I think, as you and Yuelin and Danny have said, that essentially we grow as RegTechs on the back of our clients' growth. The pandemic means our clients have had to change the way they work. And I think for a lot of us in the space, it's taken a long time to see the kind of growth and to see the traction we've seen in the past couple of months. And I think that will continue. We are going to see more financial services and other regulated industries just focus on how they can use technology better. The legacy approach won't work. And I think there is an admission across the market that things have got to change and new technology has got to be introduced. And that creates great opportunities for people in the RegTech space.
Absolutely. And on that, Rhodri, are you seeing much more acceptance to the fact that you need to change? Are you seeing the mindsets shift?
Yeah, I think so. So I think one of the things that is common, we've talked about digital transformation in financial services for many years. And I think those of us who work with the banks and the FIs understand that there's been some adoption of digital transformation, but only maybe to the point, something we always call the digital facade. People will be quite happy to put digital front ends, but actually back end processes still pretty manual, still being worked through. But now I think we see a realization that that end-to-end process has got to be digitized. They're being driven by their customers. So financial services, as we're all consumers of financial services, we're all changing the way we consume those services, and the banks have to adopt and react to that.
Brilliant. And hold that thought. I'd love to come back to the adoption as a whole and the adoption trends, Roger. So that's a brilliant point, and I'll definitely ask you to step in there. I imagine from NorthRow's perspective, you have some really, really interesting insights. Brilliant. And Paul, still staying with macro 2020 trends, RegTech in the context of the overall FinTech, what has your observations been?
Yeah, to follow on from the guys, and especially Rhodri's point, I think the biggest change for us in terms of from a customer base is we've always had FinTechs coming to us and they get what we do and being very API focused, easy to deal with. I think this year has been a marked difference in terms of now having tier ones, just having a lot of inbound interest from tier ones, and they're coming and they're saying, and I think that's building on Rhodri's point, which is it's kind of deeper focus on changing how they do things as opposed to just a simple layer on top. And so that's actually what's driving. So it's the COO of the UK arm of a bank at a tier one level, who's actually they're deciding on these transformation changes. So that's kind of changed a lot for us this year, in terms of we've FinTechs has always made sense, but then moving up towards tier ones is probably the big difference.
Brilliant, and that's an awesome shift. And Paul, on that, are you seeing, so inbound interest is one thing, right? And are you seeing that converting into actual buying decisions? Because one of the issues traditionally observed with tier ones has been the difficult decision-making process. Yeah. Are you seeing that change at all?
Yeah, we're seeing that accelerate. So I think we've been speaking to some tier ones for, I'd say, 3 years before a buying decision. But I think now that window has really collapsed. So that is, and I think there's also different routes, whether they might be using one vendor for like a legacy vendor for some element, and now they're just saying, look, we need to really support this or buttress this. And I think that's one of the kind of key ways that tier ones are actually looking to adopt RegTech from our view anyway.
Mm-hmm. Absolutely, absolutely. So to round this up, in terms of the trends, I guess there's no surprises for any of us. We kind of have all been expecting it, and so we're happy to be proven right now in this environment, even though in really tragic circumstances. But I guess it has really validated all of your business models, which is really brilliant, and accelerated the speed of change. So that's again a really, really positive change. From us, just to round up this particular question on the trends, what I would say is we are observing a marked difference. We cover different segments across the globe, and perhaps we'll come back to the geographic differences. Because we're so deep into our niche, into FATCA and CRS niche, we have seen marked differences in the speed with which different jurisdictions go, and different segments of the industry, ranging from the young challenger institutions to the top tiers, and the service providers. Maybe if we have time, we can cover that, and I think there's a lot of very interesting insights coming from you there as well. Awesome. Okay, now I'd love to come back to the point that Rhodri made, which is, the trends of adoption, and what changes we've seen in the context of the pandemic to the adoption of RegTech. Would you mind going a little bit deeper for us on this one? I think you might be on mute.
Yeah, there we go. So I think notionally, there is no financial services organisation out there that doesn't want to modernise the way they interact with their customers through the pandemic. I think we've seen historically the ones who have got this right, have grown. You look at organisations, people have great onboarding experience, they have great customer experience. People like Klarna, often held up as as a great example in this space. And I think financial organisations now are looking at the way that they structure themselves, and who goes to a bank branch, right? That's the question they're asking themselves, and how do they structure themselves? But I think the desire is there. That the barriers that typically pop up are those that are typical in large organisations. There are complexities. There are system challenges. There are processes and procedures for these organisations to get through. So I think that it's about for organisations like that, it's about matching their ambitions now with what they can do in the short term. And that will drive the adoption of RegTech. So they'll be looking for, organisations that can work with them in a grown-up manner, right? Can deploy solutions that work, and help them achieve their goals.
That makes a lot of sense. Danny, you probably have a lot of insights from the close match perspective.
Yeah, absolutely. I'm going to give one stat today, and one stat only, but something that I'll start with is regulators, because I don't think regulators really thought about RegTechs. I think they're busy enough as they are. They haven't really thought about can RegTechs actually help regulators with what they do. And I just saw this was last week, but the World Bank and Cambridge Centre for Alternative Finance, there was 118 central banks and 114 regulatory authorities. 58% of them have either accelerated or introduced initiatives regarding to RegTech or supervisory tech. And I think that's one thing that has definitely been a barrier, is the regulators being involved in on that side. Number two is around RegTechs working to their core strength and being part of an ecosystem. And I think this is becoming much better known now in the industry. Is actually there's not one RegTech that ticks your compliance docs. Actually, RegTechs can work together and actually work very well together. And I think we're starting to see a real amount of positivity around RegTechs working together, but also around financial institutions and corporates in recognizing that one solution cannot solve all of their compliance and risk challenges. And then the third area I'd say is culture within organizations has still been a massive barrier to adoption and barriers for RegTechs. And I think it still exists today. I still think within organizations, there's still, should we buy this or should we build this? And banks building technology instead of buying best in breed technology. And I think we're seeing less of that, but that's still happening. But also we're seeing some firms that have just been burnt in the past by, they have adopted some technology that didn't work. So now their view is, well, every technology is like that one bad case, where often they've had so many bad experiences of internal builds as well, and not just buying a solution means suddenly everything's going to work well, and you need to actually, the adoption of it as well and the usage of it is just as key.
Absolutely. And I think certainly with enterprise, which I think most of us here are, the adoption is a very, very long cycle in itself, right? There is a buying cycle and there is an adoption cycle across the organization. So if we have time, I'd love to just go a little bit deeper on that and whether you see the attitudes changing, because it's one thing to sell a solution, but then you have to continuously sell it within every single bit of the organization, right? And make sure that they're actually happy and they derive value. And yeah, so that's a really good point. Thank you, Danny. Yuelin, from your perspective, I imagine adoption has been, well, I'm not going to actually guess. You tell us, what have you been seeing?
I think the adoption point is really interesting. I think what Paul said earlier, like you speak to people for years, they run POCs or they try it out on a small part of their business, especially when it's an innovative technology they're not used to. And then I think COVID has really pushed different departments to think, oh, actually that is being used, say, in the innovation team or in some kind of side project. Can we now roll it out to our core project? And we have seen an acceleration of that in some of our big core banking customers. Some of them are use cases that would have needed to happen regardless of COVID. And some of them are use cases that actually COVID has accelerated, for example, because you don't have branches. And I think things that probably would have taken a bit longer or wouldn't have been such a high priority now have become higher priorities in terms of adoption. But I totally agree. Selling is one thing, but the adoption cycle could be just as long as the selling cycle. And that's something that has been really helped. And also, I think if this question was asked in March, it did feel like a little bit more panicky. And I think enterprises were more reluctant to sign on for big contracts at that exact moment in time. But since it's now been going for quite a long time, this does feel a bit like the new normal. And the new normal is at a higher level of digitalization and adoption of new technologies. And we've really recovered from that. For us, Q3 was the best quarter ever. And before that, Q2 was the best quarter ever. And before that was Q1. So in March, it looked much more scary. Whereas now with hindsight, looking back, you're like, oh, this trend has been really beneficial for, I think, our industry as a whole.
Brilliant, and congrats on that success. And just to let you know, guys, for the audience has started submitting questions already, which is absolutely brilliant. Our original plan was to leave 10 minutes for Q&A, and I'm just letting the panel know, giving a little bit of a notice to the panel, we may actually stop earlier because we are having a healthy number of questions coming in, so we might actually cut earlier and go into the questions. And just to let you know, the audience, everyone listening to us, keep submitting the questions, so we'll go through a few of the key points between us to begin with, just to let you kind of aggregate all the questions, and then we'll start going in all of the questions for the latter part of the panel. Brilliant. And how about from your perspective, Paul? Adoption, and maybe you can cover both cycles of adoption if you like. I imagine that you see that as well.
Yeah. I'd say that the higher point, to build on Danny's point, was like regulatory trust is like the biggest thing that we see. But then from regulatory trust, you've got some financial institutions which have, I guess, a more open embracing approach, like in terms of their risk-based approach, and they're far more likely to try things. And as Yuelin was saying, there might be a POC with the innovation team or transformation team, and they're going to give you a go. And once they start to see those hit rates come down, and I saw there's a question around like the onboarding times for banks. It's like the number of customers, they lose like 66% of customers, and like, if you can get those onboarding times down because the hit rates are coming down, like, then that will solve some of those problems. But like on the other hand, you have other financial institutions who just see that regulatory trust as an issue which they can never really get around, and they're not going to try little things with you. It's kind of all or nothing, and there's not much you can do in that regard. So I think like sometimes there's going to be barriers. I think what we've found through mistakes, through learning, is there's going to be some barriers which you should definitely embrace and try to overcome, and there's other barriers which are systematic, and maybe that's not the best way for you to deal with. Like, are you going to change the culture of an organization that's been doing the same thing over and over again? Like, not probably unlikely. I found sometimes it's like there's individuals in these organizations who want to move things on, who want to embrace change, who want to identify these things. Like, just identify those individuals and like keep working with them, keep helping them, keep giving them what they need to promote their like that change in their organization. I think it's still like there's still, I completely get what Danny was speaking about earlier in terms of there's systematic elements they need to address. There's still people in those organizations who are willing to kind of go out on a little bit of a limb to try to address those. So I think that's like been crucial for us, is identifying those people.
Absolutely, and we call them champions, right?
Yeah.
And just on the people point, this is a fantastic point actually to bring up, Paul. I wonder whether any of you have observed sort of the evolution in the compliance talents generally, right? So those stakeholders that we work with, that, as you say, Paul, we support. Are you seeing a little bit of an evolution in the kind of who it is that is working there, you know, from going from backgrounds to, you know, to their willingness to change things? Any thoughts maybe?
Yeah, I can
Danny,
sort of
yeah,
kick off on that. Definitely a big change. So firstly, we've seen compliance coups, so COO for compliance or compliance technology people. So I think sort of over the last few years, it's sort of really the first time we've seen people that are actually responsible for technology for the compliance team. And they are typically great to work with because they are knowing that they need to adopt technology. I still think there's some people in compliance that still don't think technology needs to exist, but they're very few and far between now. I think we've definitely moved on from should technology be used within a compliance and risk functions. So we're definitely seeing a big change in that.
absolutely. What about you, Rhodri? Have you observed similar trends?
Yeah, I think so. And well, I don't think so. I know so. So, you know, if we put kind of financial crime and compliance, you know, in a view kind of across the history, it's essentially a very young discipline within financial services. You know, banking goes back 300 years, financial crime and this compliance function really started in the mid to late 90s. And I think there was a typical banking approach to it. And the talent it attracted are what was, you know, essentially an admin audit type function. You know, you got the talent you deserved at the time with the emphasis that was put on it. As the banks have put more emphasis on compliance, as the regulators have made it more important, and as Danny says, you know, we're shining a light on how technology can come into play, it's attracting different levels of talent. I think it's attracting more people in there who see compliance as a career. I think it's more engaging, even, you know, at a junior kind of graduate level. If we think about it as a career option now for young lawyers, and we're beginning to see kind of people come in, take responsibility at a much kind of earlier stage in their career, take on regulatory responsibility, you know, take on those personal liabilities. And because they've come from a different background, a different experience, they are challenging the norm. So they are much more likely to adopt new technologies. We all see this across all of our business as consumers. You know, those of us who've been around a while, you know, we understand the impact that mobile had on financial services in 2000s. Right, we saw what happens, and now you have people coming into compliance careers who are, you know, the digital generation. You know, when they see a black screen with white text on it, or even green text on it in a business environment, they naturally recoil and they're looking for better ways. And I think that not only is it really good for the culture within compliance organizations, I think it's healthy for financial services, and, you know, creates opportunities for all of us in the RegTech space, because people want to, those type of people will always want to innovate and do a better job. I think that's culturally their background, and I think it's very encouraging.
Absolutely, I couldn't agree more. And back to Paul's point, that talent makes an amazing type of champion, right? Those are the champions that we all want. Those the brave to bring that change and make that difference. Anything from Yuelin on that? Because you're seeing different segments, so I don't know whether you're seeing some different trends in the talent, compliance talent, and the stakeholders that we work with.
I think from our point of view, we work with enterprises and then we work with more tech-first companies, although the enterprises would love to call themselves tech-first. The truth is majority of them are not. And the tech-first companies, I think, come at this from a very different point of view. They definitely would not be happy with 66% drop-off rates on their market. I think they'd be quite devastated about 20. And so they are just much, much, much more engaged because those metrics flow through from, especially if you're mobile first or app first, then you really know you have one channel and you're optimizing that channel. I think the reason maybe even some legacy institutions had much higher or much poorer metrics was because they weren't tracking them. It's not so easy to track omni-channel, who's seen you, who's come to a branch, who's done this, who's not, who's then signed on, who's gone on your website, who's decided not to. This kind of attribution is still quite difficult, which is, and linking up that journey. So you have a great omni-channel journey. It is something that most businesses I don't think are working towards, but it's not as if at this moment everyone already delivers a great omni-channel journey. And those are two problems that are still being solved by all of the different sectors, including financial services. So for us, it's not all, we often don't speak with the head of compliance, but actually the head of product or the head of marketing or the head of customer experience who are just tracking the metrics from beginning to end. And it's not really seen as this has been passed on, but much more tracking them throughout their customer journey to understand where in the funnel they are falling off. And I think banks inevitably or other financial institutions will have to start competing on that level because that's what the new normal is. It's what people have expected. I think we are quite lucky in some ways to be in a country with a really thriving FinTech and RegTech ecosystem. And of course, there are some countries that are doing more, but there's also actually, compared with what it was like 15 years ago, it's really inconceivable how we access or use financial services nowadays.
Absolutely, absolutely. And on this point, actually, Yuelin, I would encourage all of the panel now to start looking at the Q&A panel just to start to identify questions that you may be particularly passionate about, because I think we're going to have to go to Q&A quite quickly. We've got a healthy number of questions there. And Yuelin, on the actually, before we go there, Paul, was there anything from you on the talent? Did we hear you on the talent?
No, I guess just like one thing is. Really interesting in Yuelin, Danny, and Rhodri's perspective on this. We found the fact that we work in financial crime is probably our best recruitment driver, because a lot of people who come to us are doing so because like they're really smart people. They could go work in a lot of different places, and they're actually saying, you know what, I actually want to try to make a little bit of a difference as well. And however small that difference might be, they're still saying, you know what, that's actually something that really relates to me and what I do. So I think to Rhodri's point in terms of like where the industry has come from, like we're seeing it now at the other stage where it's like people want to come to us because of the mission, which I think is just an interesting point.
Absolutely, and that really does say something about us as a society as a whole, right? And our attitudes and what we see as cool and, you know, admirable. I think that's really, really awesome. That's brilliant.
I was just going to add one last point. I read a really interesting article this morning. It's on Compliance Week, and it's called the top 10 reasons why to be a compliance officer.
Awesome.
It's by the Chief Compliance Officer at National Australia Bank. So I have no association to Compliance Week or to the article, but just a really interesting reason of 10 reasons why people go into compliance. So if anyone is interested on the talent subject, I'd recommend it.
That's brilliant, 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 brilliant. The only thing to round up, kind of guys, this is just such a fascinating point because, as you rightly said, at the end of the day, the decisions are made by people, people by people. We are in the technology business, but we work with people, and if it hadn't been for our champions, we would be in a very, very different place. And for what it's worth, just rounding up all on your observations and adding a little bit of ours, we have always served very, very different segments, from the top tiers to very, very young institutions or very established fund administrators, so the service providers. And we've always seen very different type of talent that we used to work with. You know, in the top tier, used to have a very experienced, you know, for decades working in a particular area, really thought leaders in their own right, and just so serious about this. And, you know, traditionally in the younger institutions, it was, you know, much more about customer experience, and, you know, you often maybe not even dealing necessarily with a compliance person. Interestingly, I think we are observing some convergence in the cultures across the segments now, where the young institutions are taking compliance much, much, much more seriously and really getting those grey hairs across their tables, and, you know, wanting that really, really professional, experienced approach. And equally, top tiers want that, you know, fresh approach, and, you know, being challenged. So it's a really healthy, I think, convergence that I'm observing, certainly in some countries. Brilliant. On the last question, and guys, just a quick note to you, so that we're going to go to questions and start to identify anything that you're particularly passionate about. I'm already seeing some very, very interesting questions there from our audience. Just on the regulatory trends across the geographies, I might actually go first to Yuelin on this, because you cover such a lot of the globe, and I can imagine you probably have interesting insights on the different approaches, and particularly this year, the attitudes of the regulators, the developments generally across the globe on the trends.
So I think historically, the FCA and the UK have definitely been seen as a pioneer and a leader. And I think pre-COVID, when we still used to travel, almost every regulator I met internationally looked to the FCA and really respected what we were doing. A lot of them had built up sandboxes, which were very similar to the FCA sandbox. We also participated in the FCA sandbox and thought it was a great experience. So I think that was what the world looked like a year ago. Since then, my opinion is that the UK has actually been much less ambitious in their goals for, in our space at least, with regarding digital identity and access to services, compared with a lot of other countries and ecosystems. So the EU is trying to do a more EU-wide digital identity. We've seen lots of stuff come out of Asia, but not necessarily even just China, but also Singapore, Australia, Japan, like 2 days ago. A lot of even things coming out of the US. The US is now the US is definitely bigger and more fragmented, but there's appetite at the national level to talk about identity, which we think is a bit missing in the UK. I've probably spoken about 6 different government departments in some form or the other in the last month, and everyone acknowledges that things need to happen, but the appetite to do something with, and maybe this is just, there are other things on the agenda, and maybe this will pick up again next quarter, but it doesn't feel like we are trying to be the pioneers regarding this, and I think that could be a missed opportunity.
Absolutely. Yeah, I couldn't agree more, Yuelin. That makes a lot of sense. How about you, Rhodri? Is there any geographic observations from your perspective on the regulators?
So I think the observation we've had, and this is the only time I'm going to mention it, is when we look at things like the 6 anti-money laundering directive, I think we're beginning to see an appetite for regulators to start collaborating with each other. So historically, regulation's been domestic only. So whilst we've seen NGO and global organisations like FATF set the rules, even the EU, it's been down to the domestic legislators, the domestic regulators to implement that, and more importantly, enforce that. So one of the elements that a compliance organisation will always look at from a risk point of view is enforcement. What's the risk of enforcement? What does that mean? And it's very, very different market to market. And I think the support for new and innovative ways to look at compliance regulation differs from market to market. But one of the things that I think the positive out of the 6th AMLD is actually looking to kind of level the playing field in terms of enforcement. Regulators stop working together so that they can be consistent, because I don't think, you know, there are very few truly domestic financial institutions these days. They're either organisations that are doing cross-border payments, or, as we've seen with organisations like Monzo, Revolut, looking to expand very, very quickly internationally. And I think having that consistency around enforcement is going to really help our customers to be able to deploy solutions wider, and that can only help them from an efficiency effectiveness point of view and boost their customer appeal.
Absolutely, that makes a lot of sense. Any other observations, guys, from anybody else on the regulators and geographic tendencies, differences?
Yeah, from our side, slightly different perspective, just given our focus, but we've seen a massive focus globally related to conduct. So a much bigger focus from regulators, focus not just on transaction monitoring or AML KYC, but a real big focus on conduct. Specifically, Department of Justice released guidance in June this year, which really sped up some buying decisions ultimately, but moved some of the financial institutions' mood from shall we buy to we must buy. Let's say that, and things like SMCR and other areas that are focused on us as individuals and having a responsible role within a financial institution, having a lot more of a focus on what the decisions you make for your organization, and being responsible and accountable to them.
That makes a lot of sense. Absolutely. And for what it's worth, from our vantage point, because we are all fiscal, right? What we're seeing across the globe is clearly, you know, the economy everywhere is going to need a lot of help. So what we were already starting to see is governments becoming more aggressive about finding opportunities to impose more taxes on financials, where it's, you know, for financial institutions tend to make an easy target. So we certainly have seen some really interesting developments in partnerships, interest taxation in the US, which is going to affect a lot of funds and a lot of operational, I think, interesting challenges. And on the other side, what we're seeing is a real drive for more transparency. So with crypto in particular, I think has been a very interesting industry to watch, being brought into the scope of, certainly from our perspective, into the reporting. So now, you know, the regulators around the world are making it really, really clear that crypto transactions are in scope of CRS reporting from this year and FATCA reporting from next year. So I think there's the mood definitely on the fiscal side is tightening, and I think it's understandable, right? In this environment, so it's kind of like a somber note, but definitely a trend that we would expect to continue. I think what I'd love to do, guys, if you agree, is start to look at our Q&A, because we have a lot of questions there, and probably good to start taking them on. I am going to give you just a little minute to see if there's anything you're particularly passionate about. I'm going to take one, and then hopefully any one of you guys just grab the questions that you're particularly passionate about. I'm going to go for what sort of metrics the financial institutions go for to decide or justify adopting RegTech. And I think this is Amy. So in our experience, different institutions approach this slightly differently, but certainly for what we do, metrics often center around the cost of doing it manually, and comparing it with cost of doing it with us. So a really pure return on investment calculation. That there is that. Other metrics that come into play for our business is the throughput. So some of what we do is essentially go through documentation, quickly analyze it, and classify it for reporting. So the throughput of how long it takes doing this manually versus, and the throughput is a different point to the cost, because it's also affecting, you know, how fast can you get back to your customers. And then there are some metrics that are a lot more difficult to quantify, like the customer experience piece. That's becoming more and more of a theme There's a couple more metrics that we have seen being used, some of them around how many incorrect documents have been submitted. So if your solution is able to show, like in our case, 85% reduction in raw documents being submitted, then it's a big win for the financial institution, because 85% of documents didn't have to be looked at all. And others are really about how long does the customer take to get through the journey. And I think there are some questions around the onboarding, so I think we probably should take that generally in the onboarding question, but essentially around how much faster is it to onboard a customer using the solution versus having legacy. So I don't know, guys, whether anybody else has other. I know there are so many different metrics, right, on adoption.
I think Yuelin made a really good point earlier in that actually what we're beginning to see within financial services, and to your point about onboarding, is they're beginning to adopt metrics from the typical SaaS industry now. You have to look at things, you have to measure client satisfaction, net promoter score, you've got to measure time to onboard, you've got to critically look at how you treat your customers. And I think the metrics are no longer typical FI metrics. It's not uncommon for digital marketeers and banks to think about CAC, so cost of acquisition for a customer over a life cycle, and how am I going to deploy that? So it's not just about a bank kind of ROI, what do I spend versus what do I save? Actually, these complex metrics that we pull out from the technology industry are going to be more commonplace, and we see that very often, particularly if you're working with digital marketeers, you're dealing with customer experience people. They will trot out those kind of metrics that you'd expect from an Amazon or from an online retailer, rather than you get from a traditional bank. And I think that's hugely exciting, because I'm a numbers geek, but also I think it just shows how much the banks and FIs have learned from the digital innovators.
Absolutely. Yeah, thank you, Rhodri. That makes a lot of sense. Certainly resonates. Anybody else, guys, on the metrics?
Yeah, I have a separate hat where I advise some financial institutions on buying RegTech solutions. So do quite a lot of work on helping them with business cases, etc. I generally put buying RegTech solutions into 3 buckets. I'm not going to go into specific metrics, but 3 buckets of either, does it help you make money as a business? If you're a bank and you're looking to move into another territory and therefore you're looking to grow revenues from that new territory, etc. Does it help you save money, i.e. costs, and that comes down to time, people, how you're doing things today? Or does it meet regulatory requirements? And if you're not in one of those 3 categories of make money, save money, or regulatory requirements, your CFO at your bank or your institution is going to struggle with approving any sort of business case. I think the other area that I typically talk about is why a solution. I don't think a lot of companies think, actually, why do they need the solution well enough? And then why do they need it now? Because if you're a CFO, you're saying, well, why don't we think about that next year? Why don't we look at this in 2 years' time, etc. So I think one thing that I often tell people is, under not just metrics, but you also need to be able to explain why any solution, and then why any solution, and make a decision on that now. And that's critically important.
Absolutely. Guys, does anybody want to take a question from the Q&A? I have a few that I love to answer, but maybe Yuelin or Rhodri?
Yeah, I'm happy to take a question from the Q&A. I think maybe we just even start from the top and linking it with what I think Danny said, which is and also Rhodri said, like, historically, if you don't really know or have really good clear idea of who is coming through and what is their cost of acquisition, what is their lifetime value, and hence what kind of customers you want to attract, because you've always done business that way, or the channels were much simpler in the past, then it's hard to actually understand what is the impact and the value lost for all of these applicants being lost during the process. And because what we do sort of sits in the intersection of, it can help you get more revenue, it can help you meet regulatory requirements, and it can also help you save money. But in the past, when I've run ROI models with clients, it's actually the helping you make more money has the bigger impact, because especially in anything to do with onboarding, because every person you lose is a whole lifetime value that you've lost, but you have paid the acquisition cost for. And so the impact multiplies very, very quickly. And actually, depending on what your LTV is, what kind of customers you're losing, it has a huge monumental impact. So how do you deal with it? I mean, I think adopting better technology and putting customer experience at the forefront, regardless whether it's ours or other panelists or other people in the industry, I think the expectation now is a much more customer-centric experience. If you get a customer to do something that has friction, the chances of them doing that are really low. If I think you just have to do what all of the sort of customer-first companies have done and think through the entire customer journey and really appreciate every single touch point, every single thing you have to fill, every bit of friction, everything they have to call, every time they have to get out of the flow or to bring something or get something from somewhere, and analyze all of that and try and make that much better. So I know some of the publications have written things of like, how many clicks is it to open a bank account with Revolut or with someone else, or how many clicks it is to get a loan, or how many clicks it is to get a mortgage, or can you even get a mortgage, because can you even get on the phone with someone at all, even if you try to. And once you start really working through these journeys, you'll just see how much work there is still to be done, but also how much has already been done. Actually, I think I'm going to give some credit to some of the tier 1 institutions, including the one I bank at, where now once you're signed in, you can access lots and lots of different services. They really have centralized your identity, and it is actually pretty easy to get a loan, really easy to remortgage, shockingly easy to remortgage actually. So I think that there's a lot of thought that has already been gone into this, but it just needs to be thinking about this all of the time. Every time you introduce a new service, every time you do an add-on, every time you do remediation changes. So it makes you become a customer-first digital company, because that is where this whole industry is going.
Absolutely, yeah. And just on the customer first, there's a question there from Daniel, who's referring, and it's kind of it's dovetailing with the point that you're making, Yuelin, which is Daniel is referencing the European Financial Institutions report that 2/3 of applicants are dropped off during onboarding, and it's exactly that, right? It's about your experience during onboarding, and he's asking for some examples of how we tackle and improve that. And I guess a number of us are here in this space, and we have loads of examples on this, Daniel. So I think we need to be trying to make sure we cover other questions as well. But Yuelin, I think, has illustrated that really well for her business. And in our space, you know, it happens all the time, going from legacy to you know, to a good technology solution that even us, even though we are not strictly onboarding, we are part of the onboarding journey. We've seen, you know, customers give up. They just give up, and if they're really determined, they will call the help desk. But if they're not, they're just going to go to someone else. So yeah, that experience on onboarding, it's real. It's real. How many people are dropping off, as Yuelin said, at every click. Let's see, guys. Is there any questions that are in the chat that anybody would like to take? There are some interesting ones about collaborations. I don't know whether Danny, you would like to take that. There's a question around, given that, you know, we focus on specific niche areas, examples of successful collaborations. Anybody would like to take that? I can do it, Danny, if you.
I'm just finding the question. Someone else
It's
take
Amy.
the first part, and I'll
It's a question from Amy, and she said essentially the questions. Given that RegTechs tend to work on specific niche areas, are there examples of successful collaborated approaches? And I can just kick off whilst Danny, you're collecting your thoughts. Is that you know, it's true. The reason we are mainly niche and pointed is because these are very deep areas, and to do something really, really well, you have to be really focused. So most of us tend to focus, and quite rightly, I think. But yeah, we're starting to cooperate really happily across the customer lifecycle space, because 2 and 2 in customer lifecycle space is much more than 4. You know, you can get to 40. So we are in some really, really interesting partnerships. I don't want to make this a commercial discussion, but yeah, I can certainly say that we've seen value for that. Danny, was there anything from you as well on the collaboration? Yeah.
Yeah, sure. So I think probably on this call, everyone is fully APIs built, but there are a lot of RegTechs or incumbent RegTech providers that still are not on APIs. And I think in order for successful collaboration, I think that will be done through API connections. I won't name any specific companies when I talk about this. I know there was a question around specifically in tier ones. ClauseMatch do have a number of partners that we've seen some real good integrations with. Some of them are the GRC providers, so risk management providers. So some of them, some of those big players in the industry. Others are what we call the horizon scanning tools, so the ones that check for regulatory updates. But across the market in general, I have seen some really good partnerships, collaborations where there is API connectivity across those RegTech providers. I also think, just on this, it's where the RegTechs know what they're very, very good at and their niche or their area they play in, and sort of don't creep over and start taking on more because the client's asking them to. So I think this is also on, I would ask all the tier ones that are on this call to also make sure when you're working with a company, make sure they're best of breed with what they do, rather than pushing them into doing 10 other things and becoming an average provider, because that's my biggest worry is seeing that RegTechs trying to be the one-stop shop, which they shouldn't be.
That's very true, and I think there's so much research that it really supports what you're saying, Danny, across many decades of successful businesses, and how the real sharp focus is really the answer to the excellent, to being excellent at whatever it is you do. Couldn't agree with that more. And just go on.
Just on this point, we just have like a specific example for this where we worked with a tier one. I think they were incorporating 20 different providers across their whole customer onboarding.
Yeah.
From the kind of compliance fin crime perspective, there's about 3 or 4. 2 of them were RegTechs at least, and then there was like another I guess it was RegTech dealing with the complete onboarding process from start to end. And so we drove a reduction, and I think this answers that other question around the 66% drop off. We drove a reduction in onboarding time by 50% on average, and up to 80% for certain customers. And so that, like, because as Danny was talking about in terms of like API driven, we were able to get them adverse media screening, sanction screening delivered in minutes, like updated in minutes, as opposed to in days, or a kind of very batch based approach which the incumbents from our side would deliver. So yeah, like these things have happened, and it's definitely out there.
Oh, absolutely right. That's
in the abstract.
Absolutely, they're very, very hard numbers and metrics, and proven, in production. I couldn't agree more. I think from each of our businesses, which is the key to really your success, right?
Yeah.
So that's brilliant success story. And just staying on kind of the focus question, and the point that Danny made about knowing what it is you're good at. There is a question there about starting a greenfield business. What's the best practice to build RegTech compliance from scratch? I don't know if anybody would like to take that. We have to be disciplined. We only have 7 minutes left, so we probably should try and do this one in 2 minutes so we can cover the other questions as well. Who would like to take that?
If I go first, if you're starting a new business in RegTech, know your use case, right? Clearly identify the use case, clearly identify the customer pain that you're solving. And you've got to be passionate about it. I think if you're starting, and particularly if you want to go startup and you want to attract funding, know your use case, know it inside out, be passionate about solving that problem, and then you can start to build your business.
Absolutely.
Anybody else? My advice is know what you want before you see providers. Because I've seen a lot of people going, we'll just meet with 15 different providers that all do very different things, but they're called RegTech, so they must all do the same thing. So I think just being really clear of what it is you're trying to solve for, and document that before you meet any providers, because you can waste a lot of time getting excited about different areas that actually don't help you with what you're trying to do as you're launching your business.
Yeah, absolutely. And I think for certainly my experience of building our business, the key really has been, as you both said, really understanding those use cases, and not assuming that you are the one with the right view on how to solve it, and really seeing as many thought leaders as possible, as many potential buyers as possible, and really just asking them an honest question like, would you pay for this? If I build this, would you? What would be what would it be worth to you? At the end of the day, that's fundamentally, I think, an indicator of whether we are solving a significant enough pain point. Brilliant. AK, a question on the competitive landscape. And I don't know if I'm reading this question correctly, guys, and maybe the panel will help me interpret it. The question goes like this. What competitive response have people seen from incumbent providers to banks? I'm guessing that we are talking about the competition that is incumbent competition, as in our competition. So very large companies, as we come in, those that have a suite of many, many different products, and one of them may be regulatory. What competitive response have we seen? And I could talk about this a little bit, but just want to see if anybody from the panel would like to take that.
I'm happy to take that. So I think there's, in the space we operate in, there's a lot of big incumbents, and there's two main types. I think one is, I would say, like custom software companies or services companies, and then the other is the big incumbents in the identity space, so like the credit reference agencies. I think for both of them, actually, they've had slightly different responses. But some similarities. And in terms of similarities, definitely partnering. So all of the, I think, services companies are aware that they're not going to be able to build the best in breed bits, and are actually incorporating them into what they're selling. So they may be building some of it, which is custom to the institution, but they will be bringing in other people on this call and various other people as well into their tech stack. And I think that is very common, like 20 different providers that are best in breed in one tech stack is not unheard of. And then with the bigger companies, I think it's inevitable, at least from what we see, with quite a lot of stuff in the news even last week on the use of customer data and customer centricity and permission and so on. And so they've also been looking at the space. I think they've been buying a lot, they've been partnering a lot, they've been trying to move into it. So for us, we've always just had a partner strategy, and it has been a really good strategy for us. And it's also been good to work with a lot of these people, because big institutions, as much as they would like, do still work very closely with service providers for their transformation work. So I think partnering with them seems like a natural step forward.
Absolutely. Any thoughts from Rhodri on that?
So I think I think Yuelin is right. I think there's I probably rather unfairly call them the legacy providers in the space, people who are very data orientated, and I know that applies very really well to Paul's space as well. I think you see them try to build faster horses, but fundamentally, I think where RegTech is winning is we're taking a technology first approach. So somebody's asked a whole load of questions about data here as well, and it's not necessarily for us as a business, and I know that for some of my peers as well. It's actually about what you do with the data and the technology that really wins. So I think, yes, we've seen competitive responses, but they're large organisations, and those large organisations, we've begun to see some M&A activity. So I think when you look at Moody's buying Bureau van Dijk, they just bought RDC as well, and starting to merge that in. I think we'll see more M&A and consolidation in the space moving forward. And I think there are a lot of players here. So I think that's probably the thing we'll see more of next year.
Makes a lot of sense. Absolutely. And just I want to bring this up in our Q&A. There is a comment from RegTech Associates about the deep dive on the experiences of the RegTech industry with the view to informing government and regulatory policy. That sounds like an excellent initiative. So absolutely, we'll give that shout out to you. So thank you for that comment.
Can I completely agree with Yuelin and Rhodri in terms of partnerships and M&A. And I think the third point I'd mention is maybe this is more of a marketing or product marketing point, which is trying to pitch themselves as a tech company now, and like using like AI and machine learning just like wherever they can. And it's kind of irrespective of what that does for you. If that doesn't achieve things for clients, like it doesn't make any sense, right? And so what we found actually in terms of our marketing or talking to clients is I just rarely talk about machine learning, and it's actually okay, these are the things that we're doing, this is how it'll help you. Whereas with the incumbents, it's like they just talk about machine learning in this way or AI in this way that I don't know like what they're really getting out of it now. So I've just seen that their marketing has just changed in that way.
Very interesting. I'm conscious, guys. I think that we're meant to be wrapping up. So I want to thank you all for a tremendous panel. And some of the big themes that all of you have brought up is the speed of adoption is definitely accelerating. The culture is changing. The talent is evolving. There is much more of a geographical evolution as well, where the OECD is much more ahead, which is really fantastic to see. And I think big theme today has been cooperation, collaboration. The more remote we are, the more we need to collaborate, and really the sum of components is often greater than them individually. So I think that would be a good note for us all to end. And I think as a whole, RegTechs tend to be enabling, right? We tend to be all about value as opposed to necessarily disrupting anybody, but really about making sure everyone gets value. Any other final observations from anyone, guys? It's been wonderful. You've been a brilliant panel. Thank you very much, guys.
Thank you.
Take care, everyone. Thank you very much for your questions. We haven't got to all.